sleep at night. My job is to provide risk-adjusted returns that still allow my clients to sleep at night.
How much risk should you have in your portfolio right now?
Look, more risk, more return. It depends on, are you your age? Are you retired? Are you spending your money? Are you not spending your money? I think in our expectations for equity returns certainly aren't as high as for the next 10 years as they've been for the last 10 years. But I think it's reasonable to build a moderate portfolio with a target return of 6%, 6 to 7%. And we'll have years that we outperform, and unfortunately there'll be years where the market doesn't help us as much.
So clearly what's driving a lot of this pain right now and the lower returns of the Fed is raising interest rates aggressively for the first time that we've seen in decades, really, to fight multi-decade high inflation. Are you guys thinking this is going to drive the environment for what, 5 years, 1 year?
Look, I think inflation, if it's not at the top, it's very near the top. We're seeing sign that inflation is starting to come down. The market is also predicting more hikes this year than the Fed is suggesting. So I think a lot of the hikes have been priced into the market. We'll use whatever monetary policy we can to help slow inflation, but we're already seeing signs of that in the market today.
And you like dividends. I just wanted to follow up on this one because it's interesting because there is an alternative now for stocks. You've got bonds paying yields that we have not seen in years.
That's right. If you remember a 1-year muni bond paying 2%, if you consider the tax savings, that's close to a 4% return. It's a pretty safe place to park your money, and it's certainly better than cash, which is still earning nothing.
But why dividend stocks?
If you look at the long-term return of the equity markets, 40 to 50% of the returns have come from dividend reinvestments. It also provides a buffer to the volatility and to inflation. So it's not only dividend stocks, but it's companies, it's high-value companies that we like dividends and they have been proven to grow their dividends so they can protect in these rising rates and high inflation times.
Holly Neumann-Kroft, thank you for joining me.
Thank
you, Sarah. Good to have you on the show. From Neuberger Berman. Just want to show you where we stand right now in the markets as we speak. Taking a leg lower, the Dow's down 575 points right now. S&P 500 is